Hey, what's up guys? Andre Jick here, and in today's video we're going to learn how to track our passive income with a spreadsheet so we can be the HBIC, the head boss in charge. What's up?
Coming in.
Alright guys, so we track everything. We track how many miles we run, how many calories we eat, how many likes we get in each video. That's stupid. Please, my life depends on it. But for some reason, we never track our money, where it goes, how we spend it, so I decided to make a video on how to track our passive income, specifically my dividend income that I've been investing with Robinhood as well as WeBull. Thank you guys so much for all the free stocks. I've been tracking that as well, and I have made a spreadsheet that I've kind of had forever, and I want to share that with you guys and show you. I'm going to buy a stock, and then I'm going to show you it's like share and show you all at once. I'm going to show you how to do this, and I do this every time I buy a stock just to keep track of everything, to keep track of progress, because growth is important to staying the course, and I think this is important for everyone to know how to do and see. So with that said, let's dive right in. So the stock in question is Leg. They don't sell legs or anything. That would be kind of interesting, maybe like prosthetic legs. Not at all what they do. It's a very boring company, which boring is good. Boring is what you want to look for, and the company in question is Leggett & Platt. Now, they've been around since 1883, which is forever. I know because I Googled them, and they primarily make parts for houses and cars. Now, they specialize in quite a bit of steel production in industrial, household, and specialized products. 2/3 of the products that they sell to customers are replacements for old existing products. So you guys can tell that innovation and being new and edgy isn't really part of their business model, so that's a big sigh of relief, in contrast to say something like Apple or Tesla, where they have to innovate and they have to push it forward. Chances are, if you guys are watching this video on your bed or in your car, this company had something to do with building the products or building parts for those products. Anyway, I purchased 16 shares of Leg at $39.89 for a total of $638.24, which is pretty substantial considering that that money that I used to buy that stock with was money that I got from last month's dividends. And that's really cool to see the dividend snowball go into such effect that that's enough to initiate entire positions. 5 years ago, this company was priced closer to $50 per share, which wasn't necessarily a good time to buy it, but now 5 years later, this company has finally gotten on my radar because it's a solid company. It's been growing its dividend for a long time with an uninterrupted streak, and now is a good time. So just to show you, even if you know my entire stock portfolio, and again, I've made that available on my Patreon for you guys to see, I don't want you to necessarily copy my portfolio outright and then, say to yourself, well, Andre, I have $10,000. Should I just invest equally into exactly what your portfolio is? And the answer is no, not exactly. And that's because the companies that I bought over 5 years, seeing which companies dipped and then buying them and then slowly holding them. And then when they dip, I'll buy a little bit at a time. So this is a good example. This is a great company, but finally it's an attractive price. And that's when you want to buy these. So you don't necessarily want to copy everything that I do from the past, if that makes sense. Okay, so now let's go to one of my favorite resources to look up information, and that is Dividend.com. So I'm gonna type that in and go to Dividend.com, let that load. Okay, so now we're gonna type in the stock in question, which is LEG. Look that up and let's see. Okay, so now it has all of the data that we want to take a look at. So if we scroll down, you'll see the dividend yield, which is currently at 3.97%. That is super solid, and that's what I try to aim for. I don't want to go higher that much. I mean, sometimes I'll buy a little bit higher, but I see comments on my YouTube channel all the time like,
oh, you idiot, that's only 4%, that's like nothing. I made 20% on INS last night, yeah.
That's not how this works, guys. If you want to be consistent and if you want your income to grow without being at a huge risk of having that dividend cut, you want to look at some other numbers too. So annualized payout, it says $1.60. So that is paid quarterly, which means you can divide that by 4, and that is 40 cents. So for each stock that you own, you're going to get paid 40 cents 4 times throughout the year to equal $1.60. And of course, we have the payout ratio, which is 61%, which is solid. You want to be 60% or below, but 61% is right about there. And then the dividend growth has been 47 years, which is like mind-boggling for a stock to be yielding right now 4% and for it to be growing for consecutive 47 years without a dividend cut is massive. Guys, a dividend yield already of 4%, I mean, you don't need that much growth. So a single like mid-digit growth rate, like 5% per year, is super solid. And just to give you guys some numbers, I'll throw some numbers at you. So for the last year, the dividend grew 6%. In the last 5 years, it grew 5%. And in the last 20 years, it has grown 8%, which is incredible numbers. So there are, of course, some risks involved as with anything, but the fundamentals look pretty solid. So that's why I think it's a good buy right now. Okay, so now let's plug in those numbers into the spreadsheet. So go ahead and open up your favorite spreadsheet. My favorite spreadsheet is my own because I'm biased, but you guys can find it on my Patreon page where I've made it available, as well as my entire portfolio. And I've structured this, and you guys can set this up yourself. It's not too difficult. It's just kind of a pain in the butt to start because there's a lot. But if you guys are gonna make your own, I would suggest to make it something similar to this. So on the left-hand side, you guys can see this is all the company names, and I've arranged it alphabetically so I can see everything. And the next thing I have are the shares amount. That's another thing we need to know when we're plugging it in, and I'll show you just a second. This is the buy price on my next column. So for example, for LEG, I bought it at $39.89. So this gives me all of the numbers where I bought the stock at. And then the market price, which is the column next to it, is what the current share price is. So for example, if we look at, say, Apple, I initially bought 32 shares of Apple at $114 per share, and now each share costs $209.68. So moving on, the cost basis is how much it took to buy my entire position. So I spent $3,648 on Apple, and in today's value, the market value, which is the next column, is $6,709. And that's how I know the difference. And speaking of the difference, the next column then shows the gain or the loss. So in this case, for Apple, my gain has been $3,000.61, which is a growth in the next column for 83, almost 84%, which is nuts. Kind of makes you wish like I put all of my money on Apple. Nah, but don't do that because you never know what's going to happen. And again, not every one of my stocks has been a winner, but when diversified and when looked at over a long period of time, it's done really, really well. But I have losers in my portfolio too that I've kind of never sold, and I think there are maybe some stocks that I can find better opportunities for. But having said that, the next column is my annual dividend, which is $3.08, which the next one has the dividend yield, which is the percentage, right? And then the next one is the yield on cost. So after you buy a share, after it's grown, the yield of it goes up, even though the initial yield isn't what you bought it at, but over time it has grown and it reflects it. This number is not something you want to pay attention too much to because it can fluctuate. Now, the next one is the most important one, I think, and that's my annual income. So all of these columns aggregate on the bottom and show you guys exactly the cost basis, then the market value, and then the overall gain and the loss, and then the dividend yield on average, which you can see is 4%, and the yield on cost is 4.5%, with an annual income total of $6,801. And that just tells me that year over year, that's about how much I'm gonna get paid. And that's how I know, like monthly, approximately what I'm gonna get. And some months are bigger than others, if you guys have noticed. Like my June income has been like $800. Some of my other months have been like $300 or $400. And that's just how it goes. But the total will be roughly $7,000. So having said that, the stock that we bought is LEG, right? So I'm going to go to where I'm gonna put LEG, and that is about below LC, Lending Club. One of my worst purchases, I think, is this is one of those things where I was like, oh, I have $100 left in my Robinhood account. What do I buy? Oh, people have talked about Lending Club. Let me buy some shares. So I bought Lending Club, and then it just performed really poorly. And actually, for whatever reason, it's not as bad as I thought, but I've been down like 50% on this stock, and I've just never sold it. And now I guess it's come back up. Cool. So anyway, leg. So now we click on this. And by the way, on my Patreon page, I have both this guy for Apple iOS, if you guys are Mac users, and I also have a Excel version for all of you PC users. I have that available there too, but I just love the Apple Numbers app. So go ahead and click on this little icon right here. You'll see the little drop-down menu, and we can add row below. So go ahead and add the row below, and all you need to do is you just need to know this ticker symbol. So that is LEG. Now, once you enter that, go ahead and hit tab, and it'll populate all of it automatically. At this point, you just enter in the amount of shares that you bought. So in this case, I bought 16 shares. Great, okay. And the buy price is $39.89. And that's it. And that's really all there is. The rest is populated completely. That adds $25.60 to my annual income. And since we looked at the Dividend.com website, you guys saw that it paid quarterly. So I would then divide that $25.60 by 4, and that's how much it's gonna pay me every 3 months. Super simple. And again, I've done this for all of these stocks, guys, that I've just kept track for forever. And also, if you go to the next tab, you'll see the dividends received. And if we scroll below, you guys can also see all of these bar graphs, which are colored, which show me year over year exactly the comparison. And you can see this trend line going forward. It's slow, but it's growing up. And that at least gives me a peace of mind that, like, yes, these things are growing, and seeing this progress really helps me stay the course. And when the stock market collapses, and it will, don't know when, but it will, and when it does, to me, it doesn't matter because I'm still kind of in the green. I'm still gonna get paid on a monthly basis. I'm still gonna reinvest that income back into all of these high quality companies, which inevitably after a year or 2 or 5 or 10, whatever it is, they'll come roaring back up, and more so than they've ever been. And that's kind of the fun of all of it. And also I have a second tab right here, which is, you know, years 2019 to 2022. And you guys can see these little blue bars that I'm gonna be comparing against for the next year. So that's really cool to me. Like, I have a lot of fun with this. Pretty simple stuff, right guys? I promise if you do this, this will change your life. And for whatever reason, this gets me so excited every time I do this dividend stuff, because when I buy a stock, I'm like, yes, I can't wait to put it back in and plug it in and see all the data and compare and see all the visual graphs. It makes me feel like I'm making progress. And it gives me the 3 reasons, right? It gives me the what, which is my financial freedom. It gives me the why, which is I don't want to have to work a job that I hate for the rest of my life to pay for my bills. And I have the how, which are these dividend trackers and all of this progress that I can see in real time right in front of me. And it just keeps me sane and keeps me pushing forward and consistent. So that's it. Let me know in the comments below what you guys thought. Smash the like button, subscribe, and I'll see you guys very soon. Love you. Peace out.